Hi everyone, let's continue national income measurement methods. I have already covered in my previous videos two measurement methods of national income, how we can calculate national income. One was value added method and another was income method. Now we come to the third method, that is expenditure method. So expenditure method, it would include only these four things. One is consumption expenditure, private consumption expenditure. Second one is we can talk about gross domestic capital formation, right, in the form of gross fixed capital formation and addition to the stocks or inventories of goods. Third one is government expenditure. That would we are going to represent by G. And last one is net export and import. That would be difference between export minus import. So once we would understand what steps we are going to follow for expenditure method? First of all, expenditure on consumer goods and services by individuals and household. This is called final private consumption expenditures. That would be represented by capital C. Second one is expenditure by productive enterprises on capital goods and inventories or stocks. This is called gross domestic capital formation or investment I. It is divided into two parts. One is gross fixed capital formation and the one is addition to these stocks or inventories of goods. Third one is government expenditure on goods and services to satisfy collective wants. This is called government's final consumption expenditure. Means whatever the goods and services government is purchasing, that would we are counting under this head, and this would be reflected by capital G. Then the last one is the expenditure of foreigners spent on the goods and services of a country is called exports. That is exports X. The expenditure made by people, enterprises, and government of a country on other countries' goods and services is called imports. So this one is the difference net export means X minus M. And finally, what we have to do, we would calculate GDP MP, and GDP MP, it is the sum of all four expenditures. C is under private consumption, I stands for investment, and G stands for government expenditure. X minus M means we are talking about net exports. So once we will get this GDP MP, we can convert this GDP MP into NDP MP. NDP MP we can know by when GDP MP minus depreciation, we will get NDP MP. And we would convert NDP MP to NDP FC. So NDP FC equal to NDP MP minus net indirect taxes. To get NNP FC or NI, NDP FC plus net factor income from abroad. What precautions we are going to take? Expenditures made on second-hand goods is not included. It's similar. I had already explained you in my previous videos in two methods measurement. Precautions is expenditure made on second-hand goods is not included. Yes, of course, we are not going to include it because once it was first-hand, it is already included. Expenditure on purchase of old share and bonds from other people is not included because that is already included when the first time it was purchased. And expenditure on transfer payments by government is not included. Why? Because I had already explained to you, because transfer payments, these are the like pensions, unemployment allowances, etc. Against these payments, individual is not contributing and anything in the current national income. So that is why we are not including because we are paying them by reserves. So expenditure on transfer payment by government is not included. Expenditure on intermediate good is not included. We have to include only expenditure of final goods and services because in the final goods and services, these intermediate goods cost is also included. That is why individually we are not charging what including these intermediate goods cost in the national income. Then is we come to the how we can in a one go we can understand expenditure approach to national income. You can see GDP MP because GDP MP, how we can get it GDP MP, gross domestic capital formation plus capital final consumption expenditure, sorry, government final consumption expenditure plus private final consumption expenditure and plus net exports X minus M. That depends upon this would be, if this value would be negative, then we will minus this value out of these three. If it would be positive, that will be add on. Now we would like to convert GDP MP into NDP MP. So GDP MP, when we are going to deduct depreciation, whatever is the left out, that would be NDP MP. NDP MP means net domestic product at market price. After that, we would like to convert NDP-MP into NDP-FC, means MP we are converting into factor cost. So only the one difference in between MP and FC, that is net indirect tax. So what we have to do, NDP-MP minus less indirect tax, whatever is the left out, that would be NDP-FC. After that, we want to convert this NDPFC into NNPFC, that is the finally national income. So what we have to do, simply in NDPFC, one thing is we have to add on, that is net factor income from abroad. Means from the our residents, they are giving services to the foreign country and they are getting some remittances, and some foreigners, they are working in our country, they are also getting some income. So we would deduct, or we can say difference in between these two kind of incomes, then we can get net factor income from abroad. And NDBFC here is net factor income from abroad minus net indirect taxes, less depreciation. All these three things we had already done. So net domestic capital formation, capital final consumption expenditure, private final consumption expenditure, and net exports. So that will become your NNPFC. So I hope, if in the question, we will do some numericals also based on all these three methods. So easily now you can calculate NDPMP and NDPMP and NDPFC and NNPFC. So I hope this video would be helpful to you. And in the next lecture, what we have to do, we will discuss some numerical statements. So I hope this video is clear to you. So expenditure method is would be helpful. Thank you. Stay tuned and keep watching.